Home loan refinancing. This is very common. As you can see, when you take the first loan, you take for about 30 years. So there are so many things changes within the 30 years. So it is very common that you probably will refinance at some point within that 30-year time. Sometimes the interest rate goes down, sometimes your income goes up. There are so many reasons for refinancing it. So this is one of the loan options that we have used in the previous video. Let's assume that we have taken this loan when you first bought our home. So it was a $300,000 house. We make down payment 20% and so on. So all this stuff you have seen before, and we calculated the monthly payment for this as well, which is this. Now we're going to see a few options whether we can refinance this loan or not. So here is a couple of options. First is the let's say you are now at 15. So you already pay off some money. Now to answer this question whether you have to refinance or not, you have to have the loan amortization schedule, which we have shown in the earlier videos, so you can check that out. So this is the loan amortization schedule for 30 years. I have developed the loan amortization schedule for all these two refinancing options. One is 15-year refinancing option, the other one is the 10-year refinancing option. Check that video how to develop this amortization schedule. So this is the 30-year amortization schedule. So if you go, let's say we have already paid 15 years, so that's 180 months. Now this much at 181, so this much money left for this loan to pay off. So this is the now the current amount that we're going to pay off for the rest. So we already paid off up to this. So I have used that value right here. So right now it's not the home price, but that's the money left to pay off that. So this is the current value we have left. Now the loan fee, usually they kind of go up almost every day. So I have used about, let's say now the current loan fee is about 6% of the loan amount. So that's these. And then you don't have to make any down payment, as you bought the house for 300,000. It's probably now 400 or even more. So the bank will easily give you this much loan without any hesitation of down payment or anything. So the total loan that you have to take is that loan fee as whatever left for the current loan. So now I have also calculated, so for all these monthly payment option, as you can see that the monthly payment for loan C, the 15-year option is still high. So it really doesn't make sense so to refinance if you don't have, let's say, this option available. So you only have this. So let's say you don't want to pay any extra per month. You still want to pay off for rest 15 years. So you already paid off 15 years. You want to go for another 15 years. However, as you can see, this refinancing option is not really a better deal. Now, sometimes these mortgage broker or banker will try to explain that you will save interest on this new refinancing. However, it doesn't make sense because money going out from your pocket more. So let's calculate the total interest that we're going to be paying for the original loan. So we'll have to go all the way to 181. Period 181. Here is the, so just click once there, scroll down, and then hold the shift key and click the last cell of this interest rate. So that way everything is selected all the way starting from the 181 period. So that's the total interest will be paid from this original loan. And for this 15-year refinancing, you can simply sum the interest column for the amortization schedule that we have developed for 15 years. So I think that's the amortization schedule for 15 years. So sometimes banker will say, or these loan people that, hey, look, your interest, you'll be paying less interest for this new loan. So, probably a better deal. No, the more money is going out of your pocket. So it's not a better deal. Now go to 10-year option. Let's see, is there anything better there? So in 10-year option, you can calculate the interest. Again, as you have seen, that total interest paid is not really the deciding criteria whether you refinance or not. Your refinancing decision would be based on the total payment, so, or monthly payment. Now, in this case, because it's a 10-year loan and 15-year loan, so these two are 15 years. The original loan, 15 years is paid off, so you're going to go another 15 years with this original. So both of these are 15-year. This one is 10 years. So it doesn't make sense to compare the monthly payment. Obviously, in the 10-year, we'll have higher monthly payment. So you'll have to find the total. So basically, you can do this times 180 period, and then 180 period is 15 month, and then this one would be basically this times 120 period. So as you can see here, you actually save significant amount. So almost about $11,000 with this 10-year loan. But in 15-year loan, you'll be actually paying more. So it doesn't make no sense at all. It doesn't make any sense. So it makes sense if you can go up or pay a little bit more per month, 1,500, and this one is paying only 1,000. So C option is a better deal. You can save about $11,000. To kind of summarize whether you're going to be refinancing or not, you'll have to basically get the amortization schedule, to get these values, and then also calculate the interest and everything. You can simply calculate the total payment. However, without the amortization schedule, we don't have this number, so we can't really do anything. So first you have to develop the amortization schedule, then you can calculate the total payment, and whichever give you the least amount of payment, you go for that option. Assuming your money is sitting in the bank doing nothing, you're not investing in a stock or anything with higher rate. If that's one option available for you, you can probably think of that than refinancing this house at lower rate. However, if the money is sitting in the bank doing nothing, you just want to pay off the loan, take out of from your head, then definitely this refinancing makes sense compared to the original loan.